Yo, what's up, everyone? Alright, so today I want to have a quick video, pretty much tapping into all these on the left. I got three, six, about eight stocks I want to go into. Of course, if you look at them, they're all red. You can see it as either correction, the news, or however you want to see it. Overbought, oversold. Yeah, so pretty much what I want to show you guys here is that we do have earnings coming up, and I'm seeing this as a correction. And I mean, of course, the news that's coming out is moving the market. There's news about China, there's news on the cases, and then I believe there was news about, I think it was Pompeo. What did he say? What did he say? Something about the sea, the China news with the sea, and then something about Pompeo talking as well. Um, but yeah, so pretty much what I want to talk about here is that we are moving into earnings starting this week, or like the big earnings. I think starting off with banks, but yeah, if you can see that we've had this run up, right? This is Tesla. I know that I think their earnings are by the end of this month, but what I want to show is that for tech stocks, we have this kind of shape right here. Let me put a training line. So we got the first jump from the bounce, right? Or the first jump from the market dip, and then a climb, and then you got earnings run up like right there, right? So pretty much like that. Now this is definitely overbought. I was holding a put, but the put that I was holding was like right here. I anticipated to start coming down at this point, but once I saw the support was too much, I let go of the put, and it was like a $20 loss. It was all right. And then when this leg happened this morning, like it was up like $200. I should have got another put because if you're watching today, Tesla had like a $300 range. Um, yes, yeah. Well, that's not what I really want to talk about. What I do want to show is that you'll have this shape right here. You have the leg up, the climb, and another leg up for earnings, right? Same with Netflix. They've probably been climbing the whole time. So I'm gonna move this down here. Whoa, whoa, whoa. Okay, so I'm just gonna trash this one right here. Trash, boom. New training line, let's go. So right here, the climb, pretty much stable climb, like the leg up, and for earnings. And this is just a correction the way I see it. This is definitely overbought, or if it might not be overbought, it's just bought too soon. What I do want to kind of touch into is that Tesla has had its crazy climb because of the, I guess, earnings, their production, how they're going to join the S&P. There's a lot of things to name, but then of course you have people locking in profit, um, the cases, and it'll cause it to sell off. Same with everything else. Everything's red, so you can see everything's selling off. But what I do want to touch into is that the even with the cases going up, this is a small correction. Everything's selling off. But what you can really notice is that when the first market correction, the market dip happened, stocks like these had the correction, right? But then they just took off. So Docu, it was like 85 right here, came down to 68, and then it just went on a tear because of the cases. It's a medical stock, so it just took off. This right here, this dip right here, it's a major correction. If it comes below, I'm already interested in getting some calls, but if it comes down under this moving average right here, I'm definitely gonna grab some calls for earnings, or the earnings run up as everything else is running up. Same for Teledoc. You'll see that you can't even see the market correction that it had, barely, just right here. It looks like just a regular movement, but it went from 146, 116, and then it's just been climbing up. Same deal. If we were having like another small correction, then once these once the market starts to adjust what stocks are going to benefit from what, I anticipate that these medical stocks are going to start, climbing again significantly, especially since cases keep rising. And then I got Chegg here. It's an educational stock for like online schooling or online books. Uh, and what you see here is that I think this is the first earnings report right here, this climb right here. So they had the dip, a little climb, and then of course earnings, future guidance, correction, however you want to see it, and then climb. So it's easy to go back and read and see all this and kind of determine what's what. But if we keep on coming down close to this moving average right here, I'm already holding a call. Most likely can get a second one. Mine expires August 21st. It's a $95 call, and I'm just gonna hold it until even if it goes through a further correction. I'm just gonna hold it until earnings starts coming up, and then see what kind of guidance they give. Especially since schools aren't really clear whether they're gonna start or if they're gonna keep on delaying. So, and then again, another like stay-at-home stock. You got Netflix, right? If we do start staying at home some more, of course these are going to benefit a lot of viewers, subscriptions, and yeah, you know how it is. So another one you got is Microsoft for earnings. Everyone buying computers, and then just another tech stock. Of course, Apple, same deal. Run up for earnings. I mean, they've been climbing ever since, but you see right here since like middle of June or towards the end of June, it's been a crazy climb. It almost hits 400 today. I don't really think it did. I think it just might have gotten close. Yeah, very close. I was actually holding a call, a 425 call. Cost me $86. I got it on Thursday, I believe. And then, yeah, so this run up, I sold it early in the morning, right at 398. I didn't know this dip was coming. I just like to lock in profits. Sold it for 370 something, 375, and I waited like an hour to buy another contract, with that profit to use as a free contract. But once I got that contract, it just started selling off. So I bought the contract with the profit from the other one, and I'm down like 40% on that new contract, but it's free, so technically I'm not losing for the profit I got. So it's gonna be a free play. I'm gonna hold that one up until earnings as well. And then you got Google. To me, they're the ones that are lagging behind all the tech stocks, and they were having a great run up. The premium on their contract started gaining a lot. If you do option calls or option trading, I think, damn, I keep zooming in and out. I got the contract right around here. Actually, it was like 1460. So no, it was like right here. It was on this day, and the contract barely had any value. I sold it when it got to this part right here. Once it went on this little drop right here, I was anticipating it coming down to this. Sold it for I think like $30 profit, and then it took off, and I was like, I missed the train. So if it comes down, I might grab another one. But yeah, so pretty much that's all I want to talk about. Just how Tesla, it's just like a tech stock. It's an industrial stock. They manufacture their technology. This makes sense. This run up right here makes sense. This is crazy. This is just a straight rally. It's gonna have to. I believe it's gonna have to correct itself some more. Like, I know it sounds crazy, like 1300, but from where it's at, it just went up a lot. It makes sense for them to be that high, but not now. At some point, yeah, but not now. But yeah, if you consider looking into any of these stocks right here, like the medical stocks or like the stay-at-home stocks, might be like the safe stocks, because with the situation we got going on, it's not easy to tell which way we're going. So you'll at least know that with more people staying at home, these will kind of benefit. Yeah, just want to keep this one short. I believe I did. If I didn't, then whoops. And yeah, so yeah, leave a comment below. Tell me if there's anything you want me to talk about. And yeah, so tune into the next one. I'll see you guys there.